It was journalist John Ed Pierce who said, "Home is a place you grow up wanting to leave and grow old wanting to get back to." In this lesson, we're going to compute the cost of purchasing a cooperative or a condominium, and we're going to explain the advantages and disadvantages of purchasing different types of homes, all to answer the question, what alternatives are there to purchasing a single-family home? Before we get into it, let's make sure we're ready for this lesson by doing warm-up number 2. Find to the nearest thousandths the value of b given that b is equal to 1 plus 1 over x to the x power for each value of x. So I'm going to use the TI-30XS to do this, and I'm going to open a parenthesis, hit 1 plus the fraction button, 1 down arrow, put in 5 for the value of x, right, close the parenthesis, hit the exponent button, 5, and enter. This is going to give me approximately 2.5. Now, when x is 50, I'm going to go through the same thing where I open the parenthesis, 1 plus the fraction, 1 down arrow, 50, right arrow, close parenthesis, exponent, 50, and hit enter. And here I'm going to get approximately 2.7. And when x is 500, 1 plus the fraction, 1 down arrow, 500, right arrow, close the parenthesis, exponent, 500, and hit enter for a 2.7%. Now, this 2.7 is actually a little bit higher than the b because we're rounding down here, where b we rounded up a little bit. Now, let's take a look at a problem that you will be able to do by the end of this lesson. In the early 2000s, the price of cooperative apartments soared until the economic recession of 2009. In 1995, Ruth and Gino bought a co-op for $98,000. They borrowed $75,000 from the bank to buy their co-op. Years passed and they wanted to sell their co-op, but the market value had dipped to $61,000. Their equity was $6,744. If they sold the co-op, they would have to pay off the mortgage. How much money did they need to pay the bank? So Ruth and Gino borrowed $75,000 and paid the bank $6,744 in principal. This means we would look at the $75,000 and subtract $6,744 to get $68,256. So they still owed the bank that bit over $68,000. They could sell the co-op for $61,000, but they would have to pay back the bank the $68,256 they owed. So if we subtract the $61,000 they could sell it for, we find $7,256 is how much Ruth and Gino would have to add to pay back the bank, since the price has decreased. Maintaining your home and land require time as well as money. Mowing lawns, shoveling snow, and making repairs keep the average homeowner very busy. Some people prefer not to be responsible for these chores. As discussed in the lesson on finding a place to live, you can rent an apartment. Apartments have rules regarding pets, noise, sanitation, and physical appearance all tenants must follow. Since tenants are not buying a home, they do not have to make any large down payment. They make monthly rental payments. Since tenants do not own the apartment they occupy, they cannot deduct property taxes or mortgage interest on their income tax forms, and they can't make a profit from the sale of their home. A condominium is a form of home ownership where each unit is individually owned. The common parts of the property, such as the grounds, are jointly owned. Condominium owners are responsible for the maintenance of the inside of their own unit. Condominiums typically have a board of directors elected by the homeowners to manage the business matters. Owners typically vote on changes to the rules governing the condos. Condo owners are charged a maintenance fee, which the board of directors or management company hired by them uses to hire workers and maintain common areas, such as the lawn, outside walk, decks, roofs, sidewalks, roads, pools, golf courses, tennis courts, and more. Condos are purchased and sold very much like a single-family house. There are deeds, closing costs, property taxes, points, mortgage payments, and so on. Some condos are inside a larger building with a main entrance, and exit you share with other owners. Other condos are townhomes, which are individual buildings with no shared entrance or exits, but which may be attached to other townhouses. A co-op apartment or cooperative is another form of homeownership. A co-op is a corporation that owns the group of apartments. The corporation takes out a mortgage to buy the entire apartment complex. Investors purchase shares in the co-op, and these shares allow them to occupy the apartment. Co-op owners do not own their individual apartments. They own a portion of the entire cooperative development. They can sell their shares of ownership and keep any profit from the sales. Co-op owners pay a monthly maintenance fee that covers their share of the maintenance of the apartment complex. Part of this fee covers the payment that the cooperative corporation must make towards the mortgage loan each month. Like condos, co-ops usually have a board of directors to manage the business matters. Co-op owners also vote on major issues. There are also condominiums, which the owner owns both the home and the land on which their home is built. As with a condo, the board of directors or management association hired by them arranges maintenance and services pertaining to commonly owned areas. There are advantages and disadvantages that characterize all types of independent living. You must decide what best suits your lifestyle and financial situation. Here, we're going to use mathematics to compute the cost in varying housing situations. Now, let's compute the cost of purchasing a co-op or a condo. Last year, Burt paid a monthly co-op maintenance fee of $912. 15% of the fee covered his monthly property taxes. How much did Burt pay last year in property taxes to his co-op? Well, if he paid $912 and there was 15% that was the taxes, that's $136.80. So his monthly property tax was $136.80. So if we multiply that by 12 to get the year, we get $1,641.60 annual property tax. Let's check our understanding. Maggie's monthly maintenance fee is $M, of which 20% is tax deductible for property tax purposes. Express the annual property tax deduction algebraically. So we know that M is paid every single month, and 27% of that is property taxes. So that's a 0.27 times M. Now, this is also going to be multiplied by 12, because this was monthly, and we want the annual number. If we were to say 12 times 0.27, this would give us 3.24 M for her annual property tax deduction. The Seaford Cove Co-op is owned by shareholders. The co-op has a total of 50,000 shares. Janet has an apartment at Seaford Cove and owns 550 shares of the co-op. What percentage of Seaford Cove does Janet own? So we're going to express Janet's shares as a fraction of the total number of shares, meaning she has 550 shares herself of the 50,000. This means she owns 0.011, or we could see that as 1.1% of Seaford Cove Co-op. Let's check our understanding. The Glen Oaks Village Co-op is represented by S shares. Sage owns R shares. Express the percentage of shares he owns algebraically. So since we just want to express this algebraically, we know we're going to put in the times 100 at the end. Now, there is S shares in total, and R are owned by Sage. So R divided by S times 100 will tell us the percentage. Gary's job is relocating to a new city. He knows he'll be there for at least 10 years. Gary's uncertain as to whether he should rent an apartment or buy a home for the time he's going to be working there. He knows he eventually wants to return to his home city. Now, Gary wants to compare the total mortgage cost versus the total rental cost before making a decision. Gary knows that he can afford a monthly rent of $2,500. If he buys, he can put $100,000 down and take out a $350,000 mortgage for 20 years with an APR of 3.5%. We're going to create a spreadsheet similar to the one used in example 4 in the lesson on purchasing a home to assist Gary in making the comparison. There are a few factors that you could enter into a comparison between renting and buying. In this case, we're going to look only to examine the mortgage cost versus the rental cost. Gary's yearly rent increase can be modeled using an exponential function. We're going to let R represent the yearly rent, A represent his initial annual rent, B represent the rate of increase expressed as a percentage, and D represent the year number. For example, let's suppose that Gary signed a contract for a monthly rent of $800 and an annual rent increase of 2%. So this would mean that R sub 1 would be equal to 12 times 800 times 1 plus 2 over 100 to the 1 minus 1 power. And that's nice and convenient because that 1 minus 1 makes a 0, so this whole backside goes away, meaning year 1 cost $9,600. Now for rent year 2, we're going to do 12 times 800 times 1 plus 2 over 100 to the 2 minus 1 power, which really means a 1 power. This is going to give us $9,792. Now we can create a rental spreadsheet that has cells where the user can enter the initial monthly rent and the average yearly rent increase as shown in rows 2 and 3 in the spreadsheet. Insert picture. The first row, B5, after the table heading should have the following entries. B5 is going to be 1 because we begin with the number 1. C5 is going to have 12 times $B $2 times open parenthesis 1 plus $B $3 divide 100 close parenthesis exponent B5 minus 1 close parenthesis. This is the yearly rent. D5 is going to equal C5, and this is because this is running rent paid. Now the second row should have the following entries. B6 is going to be equal to B5 plus 1, and that's because it adds 1 to each payment number. C6 will be the same as C5, except at the very end, instead of a B5 minus 1, we're going to put a B6 minus 1, and that's for yearly rent. D6 will be equal to D5 plus C6 because it is the running rent paid. And we're going to copy cells B6, C6, and D6 to create the spreadsheet with the value for 10 years. If Gary takes out a 20-year mortgage for $350,000, he would have a monthly payment of $2,029.86. Using a spreadsheet, we get to enter the information for the mortgage, and we obtain the spreadsheet we have here. From the first spreadsheet, Gary would pay a total of $328,491.63 in rent after 10 years. For the second spreadsheet, Gary would still owe the lending institution $205,727.91. After making 10 years worth of payments. Out of his 120 payments, $144,727.20 would have gone to pay down the principal and $98,856 to interest on the loan. Gary's equity in the loan would be $244,727.20. That's the amount paid towards the principal plus his $100,000 down payment. While there are many other factors involved in this decision based solely on the mortgage and the rent, Gary might be better off making the purchase because of the equity he will have built over 10 years. Now, let's check our understanding of this. Make a list of other yearly costs Gary might have to consider in making this decision. Now, answers may vary, but for renting, you should include your utilities and the renter's insurance. For buying, they should include your closing costs, your insurance, utilities, home upkeep, and so on. Jake and Gloria moved to an apartment and pay $1,900 rent per month. The landlord told them the rent has an increase of 4.1% per year on average. Express the rent, Y, as an exponential function of the number of years, X, that they're living in the apartment. That is, X equals 1 represents their first year in the apartment, and X equals 2 represents the second year in the apartment, and so on. Determine the amount of rent that will be paid on their 13th year. So we're going to set up an equation, which is Y is equal to 1900 times 1 plus 4.1 divided by 100, all to the X minus 1 power. Now we can simplify all this by simply saying this is going to be 1900 times 1.041 to the X minus 1 power. Jake and Gloria's rent will not increase during the first year, so when X equals 1, we're going to wind up with a 0 in the exponent, giving us an initial rent of $1,900. You can use the table feature on a graphing calculator or spreadsheet to list the amount of rent each year. Because rent only increases one time a year at the time of contract renewal, set the X values of the table to begin with 1 and only display whole number values of X. To find the amount of rent charged in the 13th year, we can find the row in the table where X equals 13. Or we could simply substitute 13 in as the X value. So we have Y equals 1900 times 1.041 to the 13 minus 1 power, which would be 12. This means I do 1900, open the parentheses, 1.041, close the parenthesis, exponent 12, and hit enter. This means we're going to have $3,077.25. So Jake and Gloria will pay $3,077.25 each month of their 13th year in the apartment. Let's check our understanding of this. In example 4, suppose that the rent goes up $60 per year. If you represent Y, the rent, and X represents the number of years, express Jake and Gloria's rent as a function of X. In this case, it's no longer exponential. We know that the rent they're going to pay is equal to 1900, the beginning amount. And with that, we're going to add in $60 for every year that they have rent after year 1. Now, we can extend this understanding a little bit more by explaining why the sequence of increasing annual rents in example 4 is a geometric sequence. Well, if the rents were written as a series of numbers, for instance, year 9, they would be paying $26.20 and 40 cents every month. Year 10 would be $27.80 every month. And year 11 would be $28.39.60 every month. So if these rents are written in a series like this, the series will have a common ratio of 1.041 between these terms. The monthly rent for a 2-bedroom apartment at the luxury Cambridge Hall Apartments for 9-year periods are given in the table. Find the use of an exponential regression equation to predict the rent in the 12th year. We're going to round all calculated regression equation values to 3 decimal places. And then we're going to round our answer to the nearest cent. So I would encourage you to go ahead and use the online sources for exponential regression. This will give you the equation that Y is equal to 2296.036, and that the ratio would be 1.051 raised to the X power. Now, if X is equal to 12, then we're going to substitute 12 into the X to get Y is equal to 2296.036 times 1.051 to the 12th power. The rent in year 12, rounded to the nearest cent, is predicted to be $4,170.72. Let's check our understanding here. We're going to examine the regression equation from example 5. To the nearest tenth of a percent, what is the approximate rent increase at Cambridge Hall Apartments? This means we are really looking at the 1.051 part of that equation. And in fact, it is this, the 0.051. This gives us 5.1%. In the early 2000s, the price of cooperative apartments soared until the economic recession of 2009. In 1995, Ruth and Gino bought a co-op for $98,000. They borrowed $75,000 from the bank to buy their co-op. Years passed and they wanted to sell their co-op, but the market value had dipped to $61,000. Their equity was $6,744. If they sold the co-op, they would have to pay off the mortgage. How much money did they need to pay the bank? So Ruth and Gino borrowed $75,000 and paid the bank $6,744 in principal. This means we would look at the $75,000 and subtract $6,744 to get $68,256. So they still owed the bank that bit over $68,000. They could sell the co-op for $61,000, but they would have to pay back the bank the $68,256 they owed. So if we subtract the $61,000 they could sell it for, we find $7,256 is how much Ruth and Gino would have to add to pay back the bank, since the price has decreased. Let's check our understanding of this. Paul borrowed B dollars from the bank years ago when he bought his co-op for C dollars. He built up equity and paid back D dollars towards his principal. The price dropped $23,000 since he bought it. Write an inequality that expresses the fact that the new decreased price of the co-op is less than what Paul owes in the bank. So if he bought his for C dollars, then we get C minus 23,000. This is going to be our low end, and it must be lower than B minus D, where B was the dollars borrowed and D is how much he paid back. So this is how much is left.